Hello and welcome to another educational video. My name is Darren Bauer with Mortgage Intelligence and TorontoMortgageSite.ca. This video is about second mortgage loans, and we'll be talking about what are second mortgages, how are they different than a first mortgage, who are the lenders, and what are the interest rates and fees, and why would a borrower apply for a second mortgage. So second mortgages, many borrowers apply for second mortgages, typically when they can't get first mortgage refinancing, for example. And a second mortgage is a mortgage loan behind a first mortgage in security rank. So it is payable secondary to the first mortgage in the event a property is sold, for example, or even if it went into power of sale or foreclosure. It is usually a different lender than the first mortgage, typically. So the first mortgage may be with a bank or mortgage lender, trust company, for example, whereas the second mortgage is usually with a different lender and most likely a private lender. Typically, there's higher interest rates on a second mortgage than a first mortgage due to risk. Second mortgages, again, are in second place on security against the property. So because they're in second rank, there's higher risk for the second mortgage lender. Second mortgages are usually a 1-year term and mostly offered again by private lenders, some trust companies as well. So how is a second mortgage different? Again, it's a higher risk mortgage due to its rank order on the property, which causes higher interest rates due to risk for the lender. So lenders are more concerned with property equity than credit scores and income, and because of this, they are more flexible in their approval process. So when second mortgage lenders are looking at lending on a property, they're really looking at the total loans on the property versus the market value and or appraised value. Second mortgages get paid out after first mortgage. Therefore, first mortgage lender gets paid first on any house sale or foreclosure or power of sale. And not enough equity in a home means the second mortgage lender could lose money. So again, this is the risk factor in second mortgages for lenders. Second mortgages can go up to 90% of a property value depending on the lender's preference for risk and investment return. So most first mortgages will stop at 80%, and that's why there is a market for second mortgages, because some borrowers do require higher than 80% financing on the property, 85 or 90%, for example, to get the funds they need that they can't get through a first mortgage refinance. So second mortgage lenders and rates. Your typical second mortgage lenders are private lenders and private investors. There are a few trust companies that do second mortgages as well, but most of the market comprises of the private lenders and investors. And a private lender or investor could be anyone. Really anybody could lend money in a second mortgage as a private lender investor. So you have individuals that lend on properties, and then you have also what's called syndicated mortgages, or really a pool of funds put under a company that lend on properties as well. Typical 1-year rate is around 10 to 14%. Again, the rate depends on many key factors, so property location, loan to value, the overall borrower profile, usually interest-only payments as well, interest-only monthly payments for second mortgages. So property location is key. A lender wants a marketable property. So if they're lending on something, they prefer it's in a populated area where they know it can sell quickly if need be. If, let's say, the first or second mortgage went into arrears and the property went power of sale. So, small populated areas will have much higher risk for a lender typically. So let's say something 3 hours away from a major city, or something with a population of less than 20,000 people or 10,000 people. These are higher risk scenarios for a lender. Overall borrower profile does still matter to a private lender, but again, they're willing to make some concessions for credit issues and income verification, etc. Fees involved: borrower pays the lender's legal fees, appraisal. There are lender and broker fees as well. So there's multiple fees for setting up a second mortgage. Approximate lender and broker fees for second mortgages are around 4 to 8% of the loan amount on average, typically, and it still depends on the loan size and risk factors as well. So it's something that's on a case-by-case basis. Legal fees for second mortgage usually around $1,000. Appraisal usually around $350. And borrowers need to retain their own lawyer for legal advice, or what's called ILA, independent legal advice, on second mortgages over $50,000 in Ontario. So why do borrowers apply for a second mortgage? The main reasons usually are credit score and or verification of income are below the requirements for bank and mortgage lender financing. So people are looking for a second mortgage really as a last resort because other means of financing, whether through their own lender or other first mortgage lenders, did not work. So the next step really is a second mortgage and a private investor. Loan to value is over 80% limit on traditional first mortgage lending. So with second mortgages, a borrower could go up to 90%, for example, of the market value of the home. So again, second mortgage lenders will take on more risk typically than traditional lenders. And then there's certain situations where second mortgages come into play because of a scenario a borrower might be in where, for example, they have a CRA lien against a property, a judgment, mortgage arrears, stopping a power of sale, paying off a consumer proposal balance. These are very typical scenarios too for second mortgage financing also, where the client can't get something done through a traditional first mortgage bank or lender. Well, I hope you enjoyed the video, and if you have any questions, please contact me via my phone numbers or email. Be sure to follow my Twitter account for updates on new products and financing options and rates. Please like, share, and comment on this video. Share it with your friends and family and business associates. And please subscribe to the YouTube channel. There'll be lots of videos coming soon, and if you subscribe, you'll be notified of new videos that have been posted. Have a great day.